Hey guys, welcome to another trade review. And today we're looking at the trade of 13th of July. So just trading along with the 1050 macro, looking for just a small scalp for the opening range gap, for the opening range high, as well as this is the 0.75 level, the lower quadrant of a weekly premium week. So just using that fair value gap to enter. Want to see prices trade higher for the relatively equal highs. I'll show you in a second why I was bullish. And turns out it just stopped me right away. Just stopped me out right away. Okay, right here actually it's already a sign to that I'm offside. Because when we enter with a fair value gap, we expect price not fully closed it. This one is permissible for it to do so, but the lower fair value gap right here, nah, I don't want to see it trade like lay a body like that. That is just not ideal, and just got stopped out just like that. So why was I bullish? Okay, first let me just outline the new week opening gap. I was looking for that also. So okay, why was I bullish? First we have the opening range C952 and this newly opening gap. Oh, this looks like a hangman. Anyways, sell side is taken. Then we had nice displacement. Then trade back down here. Here I was looking for the entry actually. But then because I just finished my work and then I only sat in front of the charts when it was like 10:50 something. So right at here I was trading based on this whole trade idea. Because this one, look, notice this red candle, this down close candle took out opening range sell side, and then we did break through the new day opening gap, but the bodies are telling us what? The body is telling us a narrative. This is acting as an inversion, keeping price above it. This I'm talking about this sell side imbalance, buy side inefficiency, and then I'm looking at this big CB right here. This whole thing is a balanced price range. That is why this was my ideal 1050 macro entry, but it did not. I wasn't present at that time, so I just decided to take this as a continuation trade, and then we're just looking for the upside here. Just the 930 high. That's the low hanging fruit objectives. And I was looking at price whether you want to use all these clustering of new day opening gap and new week opening gap. I want to see use all this to just climb higher, ideally taking out this high, because if it's going to take out this high, definitely this high is going to be taken out, and then it just did not do so. So yeah, hesitation causes losing trades because you will get into the move late, as well as trading on missed opportunities like this. But to me, I think I would still do the same trade because this was trading based on the premise of sell side is taken. But I want to emphasize that was this a plus setup? No, it wasn't the most pristine entry that I would risk money on. Nevertheless, I just take it because I was expecting a just a small scalp. But you can see usually the nice runs happens when after the liquidity, opposite liquidity is being engaged, and then we have a nice market structure shift. Bam, right here. This is where the nice entry happens, the low risk entries, if you will. So right now, definitely price looks like it wants to go higher, if you ask me. Just reviewing back, this whole thing is acting as a reclaim fair gap. And then we are using the opening range gap, upper quadrant. Oh, beautiful. Look at price, look at the expansion. So I would, reviewing back, definitely this is a day where you were right, but you were not profitable because you were wrong about the entry. But in trading, you're gonna get it wrong a lot of times. It's just part and parcel of trading. But you can see that there is no revenge trade done after the loss. There was nothing because if I were to enter back right here, if I were to enter again, it will be chasing price and it isn't the low risk entry. No doubt that I'm quite confident it's going to tag my draw on liquidity, but there is no, it's not the model. There's no low risk entry that I would want to risk any more bullets on. So you can see this right here is the last chance for price. Okay, it was basically the last chance just for me to recover half of my loss. This is just for mitigation. It's not the model trading. It's just mitigation. And now after that, I'm done. So you can see that I was right. And this whole entry there was like a very nice entry. And yeah, I can say that if I'm not working, definitely I will catch this move. Definitely. But it is what it is. And you can be right but not profitable. I've been there a lot of times. So to me, there's no impulsiveness, there's no emotions. It's just like, yeah, it is what it is. It's just market saying not today. And draw on liquidity is being tagged, like I said, opening range low, opening range sell side taken, then we aim for buy side. That is all I was looking at. And then I was looking at the discount, new day opening gap, trading to the clustering of premium, new day opening gaps, and new day opening gaps, which is beautiful. Everything was based on logic, and just note how price was using these dotted line quadrants. These are the opening range gap, the current day opening range gap quadrants. And during 1050 you can see, oh my god, look at that. Okay, first we have prior to 1050, price was just retracing back down into the fair gap that I mentioned. And this whole thing was trading based on continuation of this movement. And then what price done is price was just hovering around here. Then in the price, all this close above the upper quadrant of the opening range gap. And what we have here, right to the tick, the body stops at it, and then it just expands from here with time, 10:50 to 11:10 macro. So this was a trade where you were right, but you were not profitable. But so what? Is it? Is there a reason for me to just go and chase price again? Is there a reason for me to go and revenge trade? No, you can see that I did not do so, and that to me means that you are another step closer to where you're supposed to be, man.